So as a trader, when you give us signals, or if you're looking for an opportunity to buy and sell, you have to look at 3 different things, right? You need to look at the fundamental part of it, which are political news that may affect the market, or the central bank news that might affect the market. And again, we look at the technical analysis. So that may include the support and resistance. That may include the the different zones where people actually they know that they'll be buying there. So which are supply and demand zones and all that. So we can also look at what we call the sentiments as well. You see, is the market on a risk off? Is it the market on a risk on? So those are important factors that also we need to look at. So we actually, right, we teach, we give a lot of mentorship, especially on the demand and supply zones, because we know that that is where the banks are buying. So you need to be able to know how to buy with the banks, right? Let me show you an entry where I bought with the banks. For example, let's look at US30. Where is US30? So look at this, guys. You see, that's where you buy with the banks. Or otherwise, even here on this last spike here, right? But because of I anticipated that the market might fall again, because this is where the time, where people were afraid because of, they heard about so many wars that are taking place, or a lot of tensions that are taking place in different countries. So, but after that, I entered exactly on the third spike. I mean, on the third candle here, this one. You see this one. So because we did understand that actually the market is now on a risk on mode, meaning that investors are actually buying the US30 Dow Jones Industrial, they're actually buying NAS 100 and maybe some crypto, then selling the dollar, right? Because when we also when we also analyze, we also check at VIX. VIX is a good technical apparatus to actually measure what is actually taking place in the market. Why? Because of VIX actually measures the fear of people. Are people afraid? When people hear about war, obviously they become so afraid. When people hear about the Fed increasing the interest rate, people become more afraid. They start going to crypto portfolio, selling all their cryptos to be on the safer side. Because when you sell BTC, for example, it is paired against what? Let's go to BTC USD. You see here it's a BTC USD, which is paired against US dollar. So immediately when you buy the BTC USD, it means you are buying BTC and then you are selling USD automatically, right? So in that instance, when somebody is having crypto portfolio, maybe they bought Bitcoin, for example, then when they sell BTC USD, obviously they are selling BTC and then they are buying USD or US dollar automatically, right? So that simply means they're actually making US dollar stronger. You see, so I want us to also look on what we have for the analysis for this week. And the reason, guys, why we are always saying we are waiting, because normally if you check, we sometimes we wait because of, we are looking for the great entries, right? Remember the market, the market is all about psychology. You need to understand the psychology of the market as well. So, as I was saying, it was because of the inflation control in the direction of, in the direction of the market as well. So the interest rate, the NFT, it's all about controlling the inflation. And if you remember the last FOMC, we told you a lot of things that after this we might see the nice buy, and then we did see that. We've been holding this US30 for so long now. We gave it last week, and we're still holding it this week as well. You see, so that is what we are actually emphasizing, right? So example, when interest rates are higher, inflation is lower, simply because of it's expensive to borrow US dollar, right? Now, if let's say you're staying in South Africa, for example, because most of you in VIP, I want to explain it with the language that will hit home, right? Let's say now, the Feds have, the interest rates are high. Obviously, if interest rates are high, you cannot go to the banks and borrow money, right? It becomes more difficult for you to borrow. It becomes more expensive for you to borrow, right? So that is what we are saying, that, when interest rates are higher, and it becomes more expensive for people to borrow. And remember, when people are borrowing money, some of this money goes to the crypto portfolio. People start buying cryptos. Some of this money goes to stocks. People start buying stocks. You see, so meaning that there is no lot of money in the market because people can't borrow anymore. It's no longer easy for people to borrow. You see, it becomes so difficult for them to keep borrowing the money. So I also, in the mentorship, we also taught about the quantitative easing, right? This can also be used to control inflation by stop printing a lot of money. Because a lot of this inflation that caused because of the banks printing a lot of money. So now they can't control all that. So they're introducing quantity easing. You see, to stop printing money. Because as Feds print a lot of money, it means there is a lot of money in the economy, and also the demand becomes higher. You see, that's why we say the return is that it results in what we call inflation. You see, because the more people buy product and services and the stocks, the more prices of everything goes up. If you check now, everything in the shops now is very expensive. You know, have you wondered why everything now becomes so expensive? Because of the results of this inflation. So now the question is what to do, where to go. Those are the things that we also need to check. So which brings us to our market analysis for this week.